I'm Don Thompson, real estate broker with the Pioneer Group, and I'm here today to talk about your credit and how it affects you when you're applying for a mortgage. Now, once again, we're here with my good friend and colleague, Jason Jean, a.k.a. The Mortgage Machine. Welcome, Jay.
Thanks, Don. Glad to be back.
Appreciate you coming in. And Jason's an expert in this field, and he's going to share with you what goes on behind the scenes with the lenders when they look at your credit. To start with, Jay, would you say that the credits might be the number one reason that people do not get mortgages today?
Absolutely, Don. I mean, that's the first thing that we as loan originators look at. And then when we submit the loan to the mortgage underwriters, that's the first thing that they're going to look for. And so that I would definitely say that's the number one reason why people would not get approved for a mortgage.
So why don't you go in a little bit to what you guys are looking at? I know there's a bunch of criteria, so give us a little insight.
Yeah, we can't really get into it all here, but the first thing that we're looking for is the credit score. Back previous to about 2007, the credit was a lot looser. Today, most lenders are really looking for a 620 to a 640 credit score minimum, and then the higher the better. Okay, the credit scores do range from about 350 to 850 on a mortgage inquiry. Ultimately, if you're above 700, you're above average, and that means that you're more likely to qualify for a mortgage. Anything below the 640 or 620 becomes a little bit difficult, and most lenders really have a absolute cutoff at 580. Even though they're a very small
So what affects that credit score?
So what affects that credit score? Trade lines is the number one thing, that we look at. So what is a trade line? A trade line is a mortgage. A trade line is an automobile loan. A trade line is a credit card or a store charge card. Anything that's going to report to the credit bureau. Student loans is another one. Okay. So what we look at with those trade lines is how long have they been open. If you just opened up 3 credit cards 2 weeks ago, then that's really not going to be a great indication of your ability to repay. But if you've had 2 or 3 credit cards for the last 5 to 10 years that you haven't been late on, then that's a great indication that you are paying your bills.
So what would you say the minimum time that you should have one of these trade lines open would be in order for it to count?
Most lenders really want to have at least 3 open and active trade lines for 1 year.
12 months.
Or more.
Paid on time.
Paid on time.
That's the key.
That's the other thing that affects your credit. Obviously, if you're late, the definition of a late payment is 30 days or more past due.
Right.
So if you have a 30-day late on your credit, that will affect your score negatively. 60-day late, even worse. 90-day late, even worse, etc. So those are the things that are going into what makes up your credit score. The other thing that a lot of people don't know is revolving credit. Revolving credit, things like credit cards and charge cards.
Right.
So what happens is every month you get a statement that shows what your balance is. If your balance is too close to your limit, it will negatively affect your score. So I have a lot of people that come into me and they say, my credit's perfect. I pay all my credit cards on time, but they only have a $500 limit on their credit cards. And every month it shows like they have $450 owed on their credit line, and that will negatively affect their score. So the key is to keep your balances at 10 to 20% of your limit at all times, and that's especially when your statement comes out. Even if you're paying them off every single month, we can't really tell that. All we know is what your balance is at the time of statement. So it's huge.
So a point you just made is that a credit report is really just a snapshot of your credit at the time you actually pull the report. So when they pull your report, if you're showing a high balance on that day, that's what they see. It may be the only day that you had that high balance, but that's what they see and that's what they believe. So you want to make sure that you keep your credit balances relative to your available credit lower. And everybody, I could owe $2,000 and Jason could owe $2,000. If my credit limit is $2,000 and his credit limit is $10,000, his credit score is much better than mine, even though we owe the same amount of money, because it's relative to what we are allowed to borrow. Right?
Absolutely.
Okay.
And then the other thing that a lot of people say is I have really good credit, I don't owe anyone anything. Okay, not having any open credit is really difficult to work with, and most of the time, it's I have to recommend people maybe open up certain things. If you have only one or two open things and they haven't been open for too long, sometimes we can supplement that credit report with what are called alternative credit. Things like your rent is the number one thing. So by rent, I mean canceled rent checks. I don't mean receipts from your landlord that anyone could run to Ocean State Job Lot and grab a book and fill out for me if I ask them.
Especially if your landlord's trying to get rid of you.
Exactly. So, 12 months of canceled rent checks. So make sure you're paying your rent with a personal check, so that we can document that. Other things like a gym membership, those things that don't show up on your credit report, but you do pay on a monthly basis. Okay, maybe rental insurance or automobile insurance, those types of things can help to supplement, but it doesn't mean that you can't have any other credit.
Great. So as you can see, a lot of stuff goes into their evaluation of your credit report. So what I'm going to suggest is that you give us a call, and if you need to check with Jason, you can check his website down below, and you get a hold of Jay, or call me, Don Thompson, the Pioneer Group. Please, I want to thank you, Jason, for coming. It's been a pleasure, and we'll be back again to talk about the other things that are involved when it comes to getting mortgage financing today. And so, again, thank you, and please like, share, join our group, and we appreciate you coming today. Thank you.